Can doing annual Roth conversions lead to higher Social Security benefits? Well, if you want to know the answer to this unique planning question, we're going to discuss it in our financial freedom video, so stay locked in. Hi, my name is Carson Graves, Certified Financial Planner and President and CEO of the Retirement Education Center.
My name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Well, Carson, Roth conversions are sometimes overlooked, but you believe that doing them could be potential for maximizing retirement income and Social Security benefits, right?
Absolutely, Andrea, because when we're talking about Roth conversions, we know that doing a Roth conversion will not increase the amount of Social Security income that you're going to receive. It's not going to increase that calculation. But what we are talking about is that if you do Roth conversions, it could have a significant impact of how much of your Social Security benefits are going to be taxable. Because when you start taking income and receiving Social Security benefits, depending on how much combined income that you do have, it can cause anywhere from 50% up to 85% of your Social Security benefits to become taxable. So today, what we're going to do is talk about the unique benefit of doing Roth conversions and how that can impact the taxation on your Social Security benefits in our financial freedom video. But before we do that, there are always two rules to retirement income that we always want to give you. And Andrea, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and jump into our lesson today and talk about how Roth conversions could potentially increase the amount of Social Security benefits that you'll be receiving.
Carson, before we get into this topic, could you quickly highlight what Roth conversions are?
Yeah, essentially, Roth conversions are just taking money from a traditional account like a 401k or an IRA and converting that into a Roth IRA. And when you do that, you are going to be committing to paying taxes right away on that conversion. And the reason for that is that all future distributions from that Roth IRA and the growth from that Roth IRA is going to be tax-free in the future.
Okay, Carson, so how do Roth conversions tie into increasing Social Security benefits?
Yeah, that's the whole element of this video to try to explain how this can be effective, Andrea. When we're talking about your Social Security benefits, they're going to be based on your highest 35 years of index earnings. And here's where Roth conversions come into play. If you can actually do careful planning around Roth conversions, you can effectively reduce your overall taxable income in retirement, because when you're doing Roth conversions, you're going to have less taxable distributions from traditional retirement accounts, which could, of course, potentially reduce your overall taxable income. And of course, as a result, your Social Security benefits, which are based on your taxable income, your combined taxable income, could now possibly be higher because you're paying less taxes on those Social Security benefits. Now, here's a quick recap of how your Social Security benefits are taxable. First of all, it is important to understand that the taxation of your Social Security benefits are based on what is called your provisional income, also known as your combined income, which is really your adjusted gross income plus any tax-exempt interest, dividends, any other capital gains, plus 1/2 of your Social Security benefits. Now, how much of your benefit is taxable is going to be then based on the combined income thresholds that we're going to talk about here. So if you are a married couple filing jointly, none of your benefits will be taxable if that combined income is less than $32,000 a year. But if your income exceeds $32,000 to $44,000 a year, up to 50% of that Social Security benefits will become taxable, and any combined income as a married couple filing jointly over $44,000, up to 85% of your benefits then become taxable. Now, if you are a single individual, that threshold is going to be anything under $25,000, in which none of your Social Security benefits will be taxable, but income between $25,000 to $34,000 is when up to 50% of your Social Security benefits will become taxable, and anything above $34,000 as a single filer, up to 85% of your Social Security benefits will then become taxable. So now that we got that part out the way, I always like to show examples on my videos of how this may play out. So let's go ahead and take a quick example of how important it is to maybe think about the planning strategies of implementing a Roth IRA to help increase your Social Security benefits. So let's just say that you're planning to retire at age 65 and you're starting your Social Security benefits at that time. Without any Roth conversions, your taxable income might look like this. Let's just say you hypothetically need $50,000 per year, and you're going to pull some of that money from a traditional retirement account, which in this example would be pushing you into a combined income bracket that causes 85% of your Social Security benefits to become taxable. But if you had spoken maybe to a certified financial planner who could have helped you timely convert $10,000 annually from your traditional IRA to a Roth IRA, starting at the age of maybe 60 years old, you could significantly lower your overall taxable income and reduce the taxation of those Social Security benefits or even eliminate them altogether due to the fact that those distributions from a Roth IRA are now tax-free and are not counted towards your combined income.
All right, Carson, so what's the moral of this video?
Well, the moral of this video, Andrew, is that annual Roth conversions can provide you with a very powerful strategy for not only managing your tax burden in retirement, but it could also potentially lead to you boosting your overall Social Security income because you're not paying more taxes on those benefits as well. As always, we do recommend that you speak to a competent certified financial advisor and or a tax professional in your area to make sure that you're able to implement these particular strategies. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.